Good morning. Am I audible? A very good morning and a warm welcome to the first panel discussion for the Dubai FinTech Summit 2025. Very pleased to be moderating the session. Before we start, I'll ask my panelists to introduce themselves in a minute or so, starting with Justin.
Hi, Justin Grooms. I am the president of Bolt, a fintech company out of the United States. So happy to be here. It's been nice talking, and it's been an amazing event in just the few hours that since I've arrived.
Welcome, Justin.
Morning, my name is Liang. I'm the CEO for Hashkey ODC. Hashkey is a leading Web3 infrastructure builder and also a financial service provider in APAC. We have global operations in Singapore, Hong Kong, Japan, and of course in Dubai here. And today I'm also very glad to announce that our Hashkey Global MENA is officially launched, fully licensed under VARA to provide both broker-dealer service and also exchange service.
Congratulations. Somu?
Morning everyone. Somu Roy. I manage the processing business for Network International. Network International, popularly known as NI, is the largest payment player in Middle East Africa. 20 million credentials. We process about 4 billion worth of transaction. Look forward to engaging discussion.
Hi everyone, Bashir, Kazour. I'm the managing director for Taurus in the region. Taurus is the leading digital asset infrastructure provider for custody and tokenization, mainly focused on financial institutions. Good to be here.
Thank you, Bashir. My name is Sarkar. I'm the banker for 37 years across the world. Being an advisor of late with technology, banking, and payments. I also host a podcast every fortnight called Majlis. Very pleased to be here. As would befit a global panel, we have panelists from North America, Asia, and the Middle East. Let's kick this off with a thought that the global payments industry is today at crossroads. On the one hand, it contributes $2.5 trillion of revenues annually, which is about 35% of all banking revenues put together. Now that's a lot of transactions. That's 3.4 trillion transactions. I was computing the amount of money sent across globally every year. It's US dollar 1.8 quadrillion. I don't know who in the audience knows what a quadrillion means. It means 1,000 trillion or 15 zeros after one. That's 1.8 quadrillion dollars worth of payments that get done every year. Now, on the one hand, that's the number. On the other hand, the revenues are actually dropping from a growth of 7% to 5%. And the equity return of payment companies, I was looking at this yesterday, have dropped from 15% to 12%. No, we're seeing so many trends. Checks are nearing extinction. Cash usage on POS is now down to 16% globally. It differs from country to country. We are seeing cards being replaced by digital wallets, by digital currencies, BNPL. I mean, there are multiple methods of paying today. Now, my first question is to Justin. Against the landscape of an industry poised for change, where do you see growth coming in the next 5 years, Justin? And what are fintechs like Bolt doing to capture this growth?
Yeah, thank you. It's a great question, and it's something that we ask ourselves all the time inside of Bolt. What are we doing? So let me give you a brief for folks that don't know. Bolt is primarily in North America. Of about 330 million American consumers, we have about 85 million wallets. And in those wallets, we see multiple different payment types for those consumers. Some things that we're used to, like credit cards, debit cards, but also some emerging or niche methods of payment. We see more use of crypto, we see more use of bank payment. Where we see the future really going is fintech that is accessible to more people. So what we focus on inside of Bolt is, if I have an identity layer over an individual consumer, how can I provide that consumer with easy, high utility access to different payment methods in a way that they can understand and digest. So on individual transactions, I can choose with different types of payment methods might work for me and for my transactions. Why I think that this is so important to where we go in the future is these types of broad, democratized methods of accessing fintech allows consumers to explore niche corners of product that might be out there that serves them better. I think what we're going to see, then, in summary, going forward a little bit, is more access for consumers in one spot to see all the different types of payment methodologies that are available to them. In many cases, payment methods they aren't even really aware that they have.
Just an all-in-one app, and the customer chooses the method he wants to pay.
Yeah, well, I mean, my vision, our vision is that a consumer, all of us in our capacity as consumers should have agency over our financial power. We should own that identity layer over it, and when we look into our financial power that's underneath us, we should be the ones that control that. What that allows for, frankly, and why I'm so excited to be here with all the folks that I've been meeting, is integration of innovative and new payment types that are relevant for individual transactions, individual consumers, individual economies, in a way that really gives people exposure to new, innovative things, allows for things to be experimented on, different payment methods or different cost structures. And you talk a little bit about what's happening with the revenue space around payments.
Yeah.
I think a little bit of how this is going to be, frankly, overcome is, yes, there is going to be more competition in payments for price. And I think that folks are not going to be able to charge as much for payments as they have in the past. However, if we're democratizing payments and giving more broad access to how people can pay for things, and allowing consumers to have access to more financial tools inside of their wallet, then that's going to result in increased usage overall, which is, I think, a great thing for that.
But the consumer is great as well, right?
Yes.
There's choice as well as lower pricing.
I think that that's exactly what we want. We want choice, we want lower pricing, but we also want to provide tools to more people. I think that the more and more that I get exposed to the industry and the more that I meet with people, is I realize how many people we don't touch yet. How many segments of society just are simply underbanked or underfinanced in any way. And that is such a shame because there's tools that are available for people.
Right.
And I think that, frankly, access to finance, access to fintech is a way for people to make better for themselves, for their families. It gives them the ability to change their life, frankly.
Absolutely. Yeah, there are 550 million plus crypto users in the world. It's about 8% of the global population. Dubai, UAE is unique because 1 in 3 adults here use crypto in some form or the other. But we all know the advantages of crypto, right? Instant settlements, lower cost, greater transparency. But there are also some negatives, like price volatility, like acceptance limitations, as well as regulatory supervision or concerns. In your view, Liang, how do you see blockchain-based payments taking off globally in the next 5 to 10 years?
Sure, that's a great question. So I think for blockchain to play a bigger role in the payment world, there are definitely like a few obstacles, right? Right now, if you're talking about we all know we can use crypto for payments, but if you walk into any retailer shops or you want to buy clothes, for example, it is rare to see there's any retailer, right, to offering this kind of service. So I think more acceptance from merchandise will definitely be key, right, for more adoption for crypto payments. And also in terms of settlement speed, we can see that even for Ethereum, for example, sometimes when the network is quite busy, then to confirm a transaction, it takes really a long time. And of course, there are solutions like layer 2 solutions, which basically are helping addressing this concern. So that's the second thing I'm seeing. A third one, as you pointed out just now, is more regulatory clarity, because for the areas that we are operating at, like Singapore, Hong Kong, Dubai and Japan, each of the jurisdictions have very unique set of regulation standard. And if you look at Europe, for example, MiCA is coming online. There's definitely like another set of like regulatory oversight. So how can we, navigate through the different jurisdictions without being arbitraged? That's also another key. And the final point brings us to the payment on stable coins, right? Right now, it's still pretty much dominated by Tether and Suvo, and the entry barrier is quite high for like newcomers to make a sizable stable coins. But definitely, like if you want to do payments, I think users and merchandise, they want to avoid this volatility. So that's another point I want to bring out. Thank you.
Absolutely. So Bashir, Justin talked about all-in-one apps. Liang talked about crypto and stablecoins. For all these, different payment systems to work together, interoperability. Your company does this for banks in Europe as well as digital banks, as Taurus. This requires a lot of action. It requires common protocols, standard APIs. It requires interoperability agreements. How do you see the traditional players and the newer players coming together in the new world?
Absolutely. Interoperability is, I would say, it's the core or the backbone of the payments world moving forward. And for that reason, you see there is new standards that are coming out. You have the ISO 20022, which basically has to come into effect by November of 2025 this year. And this basically will kind of be the bridge between the legacy or the core banking systems that you have with the new payment channels that you have across the globe. But this is not only it. Also the open APIs that allow and facilitate for those payments to kind of happen. At Taurus, what we do is we provide the custody for the digital assets, whether it's crypto, tokenized securities, stable coins, all of that could be integrated through our open APIs with the bank's applications and facilitate the payments that are happening. And with that happening, also we witness, first of all, faster, cheaper transactions. The banks are still in control. They are acting as custodians, whereas the consumers as well and the merchants are benefiting from those faster transactions. Something similar to what Liang mentioned earlier, that we don't see a lot of merchants doing it, but we also see a huge adoption coming from Sarkar and some other payment processors.
Thank you. Somu, you represent the largest payment company in the region. What trends are you seeing in the region that you need to stay ahead of? And as a network, what's the strategy to be able to integrate all of this together?
So, being the largest payment player, we have to stay ahead of the innovation. The hallmark of network is pushing the boundaries, so it's almost worth $100 million every year we put on keeping and upgrading our technology. But we cannot do it all, and the key thing there is partnership. Now, coming to the trends, I would say 4 key trends. Now, the shift to digital, you very eloquently mentioned with, I never heard that quadrillion thing, but glad to hear that. But for me, it's not only the digital shift, but it's also the digital players. So our first 1 million cards probably came in few years from the largest banks like EMBD, your X-Bank and ADCB. Our last 1 million, we don't even call card, we call it credentials, came from AN Money, DoPay, Camel Pay. None of them are banks, and it came in few months. The second piece is that it's not only the payments, it's how we borrow. I'm proud to call both of them as our strategic client. Tabby and Tamara revolutionized the BNPL space. And the partnership comes here. We are also working at NI on embedded finance, where we use the power of data that we have at SMEs. We tap into a balance sheet of a bank, and also we work with some AI solution provider to create a merchant-based lending solution. The third, I would say, how regulators moved ahead. Before regulators will come with regulations, now they kind of push us to drive innovation, the new open banking regulation and stuff like that. And last is the data is the new oil. A lot of investment going on data and powering most of the new CVPs we are coming for our customers. I'm not calling AI as a trend because that's a basic foundation. AI is no longer icing in the cake. It's the cake or probably the plate itself. Having said that, other than the investment, we are putting a lot of effort on partnership, and a key part of it is fintech partnership. So fintechs kind of solve a specific use case and the gaps in the market. We are the largest acquirer in the market. But however, we see fintechs comes with very specific niche solutions, let's say for our F&B segment or our hospitality segment, and we extend our platform, welcome the fintech, so that the ecosystem develops and merchants, consumer, all gets benefited.
Excellent. Justin, Somu touched on AI, and we are in times where Gen AI is a revolution sweeping all of us. McKinsey estimates that Gen AI will add about 4% minimum to the bottom line of banks and financial companies globally in the next 5 years. From your perspective, what impact do you see AI making on payment systems? Will it improve customer service? Will it reduce fraud? Will it reduce costs? What will it do to us?
Yeah, I think that the answer is probably all of the above. I think that the big application that we're seeing right now is being able to use AI to overcome a challenge that consumers have in market, which is a paradox of choice. Which means for us that it is essentially legwork for a fintech like us to integrate with different payment partners and different banks. We build and maintain thousands of integrations and have a backlog of thousands more that we want to be building. The challenge that we actually run into is surfacing to consumers at that exact moment that they're considering a transaction what we think the best options might be for them. And that doesn't mean just personalization of what Justin might want or what someone else might want, but what in that particular transaction of all of the different payment methods and types that might be available theoretically for a consumer to use. How do I pick up signals and surface that most relevant option, those few most relevant options? That is an application we're seeing work right away, where we can pick up, decades of signal that we have on seeing how people buy things and recommend to them effectively, or stack rank, similar to your TikTok feed, what we think is going to be relevant for you in that moment. And it turns out that just like we can have a social feed telling us, what our next dopamine hit needs to be on a social media application, we can use the same types of technology to help people choose which payment types are most relevant for them and do it in a quick way. And that's actually something that prior to maybe the last 6 to 12 months would have had to go offline, an analyst or someone would have had to look at it. Now we're able to surface these recommendations faster than a human could make the decision themselves.
That's excellent. Liang, half the global revenues of payments come from Asia. And Asia, we know, is dominated by super apps like WeChat and Alipay. We're also seeing super apps coming out in this region. There's Kareem, there is Noon, there is Liang. How do you see this channel playing out in the future? Will it take away a lot of the payment volumes?
Sure. Yes, I think for those who have, of you who have used like WeChat Pay or Alipay before, it is super efficient. Basically, like you can do anything like order food or like buy insurance, travel insurance when you are overseas, right? I do see this consolidation is continuing, right? Like regarding in China or like the rest of APAC or even across the globe. And even on the payment side, I think people are consolidating as well in terms of the service, where they integrate like crypto as part of the payment rails. I do see the growth potential is huge, right, for those players who can give the best user experience while also addressing like some of the concerns. For example, if you're touching on crypto, of course, like there will be like relevant AML CFT checks for your users to ensure that your payments are compliant and of course, like I remember last week when I was in Zurich attending the Point Zero Forum, one of the speaker, he gave a very interesting example. So I was asking him, what do you see like the most exciting thing for you in payment in the future? He was saying like there's a little boy in Africa and there he's planting an apple tree and then he's selling the apples to users in, for example, like Europe, and then immediately he received the funds in his wallet. So that's something I think I'm looking forward to.
Absolutely. Bashir, with the rise of alternate payment systems, use of payment cards like Visa and MasterCard seem to be under threat. And we're seeing these companies tying up with fintechs for stablecoin-backed payment systems and wallets. What collaborations do you see coming up in the future, and how do you think these will transform customers' lives?
Absolutely. The transformation is definitely going to be better for merchants and for consumers. If you think about it, the merchants are going to start paying less fees on the transactions, and the consumers are going to be able to receive their funds immediately. Similar to what the gentleman said earlier at the panel. What we have seen is that, as you mentioned, MasterCard and Visa have a huge network. They are already partnering with a number of exchanges. Some of them are part of this forum over here. They're partnering with different stablecoin providers to be able to facilitate those payments. And it's happening, and it's happening much faster than we anticipated. And this is, I would say, in the next few years, a lot more merchants will start accepting stablecoin payments, maybe other forms of crypto payments, but this is definitely something that's coming towards us.
And Suvo, talking of alternate payment systems, we are seeing the emergence of national payment platforms like ANI, like UPI in India, like Benefit. How do you see this playing out in the future, and what does it mean for the likes of Visa and MasterCard?
So at NI, we feel payment is a local business, and the new schemes like J1, ANI in Saudi Arabia, MADA, KNN benefit across JCCs, these are there, we embrace them. We take pride, we were the first issuer of J1 cards with Almara Bank. We were the first one to accept J1 cards, so this is here to stay. But the key question is why? I mean, out of the 90 countries where there is local schemes, if you see the cost of acceptance is less than half than the countries where there is no local scheme. So it kind of creates a market pressure which democratizes the payment and democratizes the payment acceptance. The merchant gets benefited and all. Also with the current geopolitical situation, I feel it's important, rather than waiting for a black swan moment, you rather embrace a local solution. But the key is how we play the bilaterals, and again, coming back to the old point of partnership. The J1 or MADA's initial challenge was how it will be accepted cross-border. I could see a lot of co-batch partnerships coming in, UPI, J1 getting integrated, GCC-NET, J1, there are a lot of partnership talks going on. So how these partnerships pan out, that will be the future of payments.
Thank you. And Justin, while 90% businesses globally are SMEs, they still depend on traditional methods of transfer, right? It's checks, it's money transfers through banks, very traditional ways of settling payments. What are some of the innovations you are seeing, especially in the US, to help SMEs move forward with the modern needs of payments?
Yeah, it's a great question. It's very interesting that you asked this. This morning I was going through emails, and I was looking for an issue that even us we consider ourselves like a fintech leader, especially in the United States. We were having an issue that checks that had been mailed to us had been, misdirected, and there was a team looking to sort of track it down, and it just made me remember, essentially, with how much innovation is occurring in the market. People still have cash for tips. People still are paying things for checks. There's still offline marketplaces where people are making transactions. There's so much of the economy that is not currently being served by fintech. And I think that's that's just not really appreciated. You know, an example is that the federal government in the United States recently announced that it would discontinue acceptance or issuance of paper checks. And there was significant pushback about this domestically. And I think it's such a reflection of how much work or how much opportunity still exists. What we like to look at is that a lot of these types of payment methods that exist right now, either checks or cash that people still use out in market, allow for an intimate, personal, transactional relationship to occur between two people. There's a relationship that's there. That intimacy, that relationship in the transaction, the personal nature of it, is something that we need to capture with fintech solutions if we want to see those sort of older methods start to fall away. There is just something different about handing someone a bill or a coin in current physical currency or sending someone a check. There's a personal aspect of that just doesn't exist in fintech yet. And that's something that I think that we talk about what networks are going to need to do going forward is to the extent that those networks can start pushing insights about the consumer and forming information about the transaction and not just moving value between two locations, then I think there's a big future for those networks. To the extent there's not, I'm sure they're worried about that.
Agree with that totally. Yeah, when do you think I can pay for my Starbucks coffee with crypto? How soon? How far away is that?
Well, it's a good question. I definitely look forward to as soon as possible. But in terms of timeline, I think still we need to settle the basic, address the basic concerns like all Starbucks will be able to plug into the crypto space. So definitely the infra solution will be definitely a great idea to be the gateway, right? So and then reliable partner like us who provide compliant and efficient off-ramp is also key as part of the solution.
Bashir, your views on this? Given that UAE is the home to over 400 blockchain-based companies, this should happen in Dubai and Abu Dhabi before anywhere else in the world, right?
It is absolutely happening. If you look at some of the exchanges in the network now, so they are already issuing MasterCards or Visa cards. So there are partnerships that MasterCard did or Visa did with Stripe, MasterCard did with Circle, OKX, some of the exchanges. You would be able to basically use that to pay with stablecoin and the funds are automatically converted into fiat to the client or into Starbucks. But this is already happening and the UAE definitely, with the issuance of more stablecoins over here due to the central bank regulation on the stablecoin issuance, we're going to see more and more of that happening also.
Excellent. So one of the big issues troubling the payments industry is rising fraud. And global losses from payment card fraud will hit $400 billion in the next decade. Now this is also being amplified by the use of AI, right? Both in terms of prevention, but also in terms of committing fraud. I mean, there are regulators issuing now regulation that protect the consumers. There's lots going on in this space. What is the industry doing and what is the network doing to address this issue?
So great question, and fraud is a problem. I mean, you as an ex-banker, if you think in last 10, 15 years, the request on friends and family you will get is generally a mortgage rate, you cannot reach the call center, RM and all. I was just thinking, the pure anecdotal evidence, year to date, it's almost half the year. Any request from friends and family I got, it's somebody's card got compromised, ID got compromised, it's how do I pay, I cannot reach out. So it's there. It's interesting that the total payments amount is that ginormous number, but 400 billion, that's like 10x of what the fraud is now. Now, four things. One is the basics, which is the industry standard, the ISOs, the PCI DSS, which we all follow. Second is pure industry, banks, FIs, fintechs, best practice. Third, regulators coming in a very, very, very strong way. And fourth, I would say, again, coming back to partnership and innovation and work on AI. We just launched a product in partnership with a couple of fintechs, which is you can integrate with your WhatsApp banking and you can authenticate a transaction real time in WhatsApp. If all goes well, by end of this year, all my NI clients, in the sense UAE clients, can move out of the SMS-based OTP and 100% move to biometric, which is way stronger proposition on proofing fraud. Again, we cannot eliminate it. I think the industry needs to come closer together to fight it together, share data, share best practice.
Excellent. Okay, now time, gentlemen, for some rapid fire questions. I will tell you, give you a statement, which is, imagine that in 2030, 5 years ahead. We're sitting in May 2030 in the same room, react to the statement, think of that timeline, okay? Yeah, I'll start with you. Crypto and blockchain-based payments will make up 25% of all payments.
Well, I think that's definitely plausible. I mean, if you look at the normal projections, probably it's less aggressive. But personally, I think we are at the tip of the revolution. So definitely, I think that's plausible.
Justin, by 2030, cash will cease to exist in all developed markets.
False. I don't think that it'll cease to exist, but I think it'll be an integral player in a much more complex payment scheme that involves fiat and non-fiat currency, physical in that case and non-physical. And it'll be the integration of all of those different methods of payment that will make it all work together.
And both will be a market leader in that, right?
Of course.
Of course. So, 100% of all domestic payments in this region will be done by national payment platforms.
Domestic payments, definitely, yes.
100%?
Yes, I do feel so in 2030.
Bashir, voice control payments. Please order coffee, send money to my mother on Mother's Day will become commonplace. Is that going to be happening by 2030?
I do it already now. So I come from a country where the banking system has collapsed a few years ago and there is no more trust in the banking sector over there. My parents live in Lebanon and I want to support the only way to do it, sending through stable coins, which get received instantaneously and they could actually have them converted into fiat in the country. But that is already happening. 2030 for sure. Probably easier and faster, different mechanism.
Yeah. By 2030, big techs and not banks will become the biggest player in payments.
Well, I think we have different fashions, right? Like different cycles. Still, I would say like banks definitely here to stay, right? Because like you cannot just bypass those regulatory requirements. It will be a complement, and collaboration between the two.
Okay, so with all the developments happening in AI, will fraud losses as a percent of total payment volumes go up or go down?
It's a tough one. I would say it remains similar.
Tough question. Will it same?
It will remain same because the pie will grow so significantly large. The amount of fraud losses will not grow at a higher rate.
Yeah, you can react to that as well. What do you think?
Right, the businesses that we are in, I think, I reckon this gentleman's idea that the pie will grow bigger, but in terms of percentage, probably more or less spare and share.
Okay, Bashir, remittance cost today as a percent of total amount sent is pretty high. It's about 4 to 5%, which is not so good for the consumer. The UN wants it to come down to 2% or less in the next decade. Will that happen by 2030, you think?
I think it would. I think with stablecoin transfers, we will witness less than 1% in transfer fees. And definitely this is something we can expect by 2030.
And finally, Justin, payments anywhere in the world will be 24/7 by 365.
By 2030?
Yeah.
Yes, absolutely. I think that'll be capable anywhere in the world, especially with the pace of communication advances that are occurring, which obviously is an important part of what we're talking about. But also the ubiquity of different payment methods and digital identities. I think all of those three things will come together. Perhaps by 2030, that will allow instant payments globally, anywhere that you can get a signal.
Thank you, gentlemen. That gives us 5 minutes for questions from the floor. Any of you want to raise your hand and ask a question, any of our panelists, please feel free. I guess there's a mic go around. So please, we have 5 minutes for a few questions for the gentlemen. Anybody? his best to do. Sorry, the mic is not working. Can you get the mic to work?
Yeah. Can you hear me?
Yeah.
Fine. Hi. This is Rajiv from Go. I wanted to ask, as we are progressing in the payment stream, fintech and stuff, why do you think the fraud is not going to go up? We've seen in almost last 5 years, the fraud has been tremendous. And why do you think it will not grow? I feel it should be growing probably faster than the fintech itself, because there are a lot of people out there trying to make a fast buck. So I would like to know what is happening at your end to prevent fraud from happening from fintech payments.
Why would fraud go up?
Fraud will go up because the innovation, the new tech innovation, it's also very democratized. So before a complex neural network will come, it will only reach the hands of the PhDs, the big research labs. Now the fraudsters can use AI, they can use ChatGPT. So as we are growing, the fraudsters are growing, yes, there are practices that's coming in, how innovation is coming, how we'll try to kind of attack them and stop them, and hence the industry standards and partnership. But with the innovation is also getting democratized, and fraudsters are getting smarter and having access to those technology. Now, you cannot stop access to technology to people. Like with the internet cost going down, with the technology being more accessible, I think that
So I think Somu's question is, therefore fraud will go up. Why do you think it won't go up?
because the industry will fight it more and more, and will try to keep a balancing kind of paradigm to it.
Justin, how do you see frauds in the US and how are you controlling it?
Yeah, so one of the things that I reflect on is that I was at an event last week that was talking about just 150 years ago in the United States, something like 30% of all currency was counterfeit. That number is significantly lower now, right? So it's a couple percentage points. They could get the number lower, but the costs and the barriers to increasing security on physical currency, for instance, outweigh the cost of fraud. I think with fintech and identity, right? Like, so we manage identity layers for people, for 80 plus million Americans. There is a level of certainty that we can apply to an identity layer that will almost eliminate fraud, but it would make use of the tools just completely impractical, right? Like if I needed physical in-person verification for any sort of identity or transaction, that's totally impractical. So I think that what we see is a balance of how much fraud the market will accept. I just want to point out two big numbers you had. Yes, there's hundreds of billions of dollars worth of fraud. It is a major expense. I'm frankly more concerned about what it enables as opposed to the cost of the fraud itself. But let's compare that to the total number of transactions in US dollars that you characterize as in the quadrillions, a number you needed to explain to us because we can't even conceptualize, as if we can conceptualize a trillion.
Absolutely. Yeah.
And I think that's very important to keep in mind here. The relative size of large numbers, and look, we can absolutely dial it up to reduce fraud, but it's going to make all of the transactions that we did this morning to buy a cup of coffee, to take a car to get here, to call someone back home, impractical.
Good point. Any other question? Yeah, lady here. Sorry.
Question is for Somu. One of the discussion you mentioned about. Can you hear me now? You have mentioned about dealing with fraud, and the biometric would play a significant role at some point. But having said that, we still have applications which use biometric and there is a fraud happening. So how do you think that will contribute, or that will enhance, or the security moving ahead by 2030?
Question, will biometrics eliminate fraud entirely or no?
Nothing, as I mentioned, nothing will eliminate fraud entirely. It just makes the fraudsters' life difficult, their job difficult. If they have to put 10 hours of effort to do a $100 transaction, it's not worth it, so it's making their life difficult. So biometric has a lower fraud rate than normal OTP. So as the whole industry pushes towards biometric, the overall fraud finishes, reduces. Fraudsters will come up with something else on, as you said, how they kind of get into the biometric, and we will come with biometric 2.0, 3.0. So it's a journey.
Our time is sadly up, so gentlemen, thank you very much for your illuminating comments on payments. Clearly, the future is bright, the future is exciting, and the future is now. Thank you very much.
Thank you.
Thank you.
Thank you.